All right, welcome back, everybody. Happy to do the 44th episode of the Brick Wall, and I'm pleased to be joined by Amanda Parness of Spring Advisory Services. Thanks so much for joining me. I always start with, where are you?
I am in New Jersey, right outside New York City, and it's been hailing a little bit, so hopefully on and off. So hopefully, we're not interrupted.
Well, I'm happy to have you inside then, right? I did my interview outside yesterday. It was very hot, and luckily it wasn't hailing, but I totally would have gone inside. But thank you for joining me. I am very excited to talk about your new venture and what you're doing with Spring Advisory Services. Why don't you, let's start by take us right into it. Tell us about Spring Advisory Services.
Sure. So Spring Advisory Services does a couple things. We're an advisory firm that basically helps mid-market companies or lower middle market companies get to the next level in their life cycle. We help companies and founders grow. We give them advice. But at very basic level, we're serving as an external senior executive to help make decisions. We break down your business with financial tools to help you make the right strategic decisions.
And what inspired you? I mean, you have a long career, been doing working as an investment professional for 25 years. Why now? Like, what inspired you to get out on your own?
Sure. So I worked in large institutions for many years, almost 25 years. And we would invest between $10 and $75 million at a clip into a company. I found that I really enjoyed working with the smaller businesses and mid-market companies and helping them grow, and similarly with some fund managers. But I guess it came to a point in my career when I kind of felt like there were certain constituencies that specifically were being overlooked, specifically women and minorities, and they were getting left behind. And there was a lot of press about this. How many women-backed companies are venture funded? How many minority-owned companies are venture funded? And I felt that my prior firm, when I looked at what we did, we didn't do much of it. And not intentionally, just because we were presented with companies and then we're evaluating, are they good or not? So I was thinking, what's the reason why? Why are we not seeing these businesses? And I thought it came down to two things. The first was maybe these people just didn't have the personal networks to find the financial institutions that are small to access the private capital markets, that's debt and equity. And secondly, maybe if they did or could get access to that those networks, they didn't have the language or the lingo that was very specific to present their businesses in a way that made them, easy to understand for the people that were on the other side of the table. So I spent 25 years evaluating, hundreds of businesses in my prior firms and investing in managers. And I felt that I was in kind of a unique position, being a woman myself, wanting to make change, that I could really bridge, the two communities, the financial institutions, the private capital markets on the one side, and the, women and minority business owners on the other side.
That's a super important mission, and a great reason and an amazing differentiator, especially during these times. But with your career history, looking back on that, I'm sure you've seen plenty of people left out or overlooked because of some of the things that you mentioned. So I think that's should be inspiring to others. And so let's dig in. I know you just touched upon it, but what makes your your approach at Spring unique? Like, what do you bring to the table? What are some of the other differentiators aside from your angling and trying to support and help those types of businesses?
Sure. So I think what's the way we're structuring ourselves, kind of as financially, and the kind of what we're charging, I guess, is we charge a monthly retainer and then some points of equity in the business, and that's important for a very specific reason, and that is alignment. Like, if you think about where larger companies could get this advice before, they can hire a McKinsey or a Bain. They can hire a large consulting company to help them go in and slice and dice, their business and figure out, what's wrong with it, or, how it can be better and stronger. But it's super expensive, and there's no ramification or penalty for being wrong. So, a company will hire a consulting firm, and then there's no consequence, and they don't help see it through. So that's kind of that was kind of one issue. So,
Amanda, I lost you.
Who work with me and the client. The second way, can you hear me, by the way?
Yeah, I lost you for a second, but you're good. Absolutely. We're perfectly fine.
Okay. The second way an investor can get this kind of aligned advice is to, or I should say a company can get this aligned advice, is to sell a meaningful portion of their a lot of dilution to the founders. And, I kind of thought for a small company that was, really that, this would be a way to get that kind of private equity ownership type of advice for small businesses. Now, what I'm doing here is, I'll do anything to help a business. So for some of my, everything from their accounting and reporting, I make strategic Hi,
there you go.
You see me, Warren?
Yeah, absolutely.
Sorry.
No, not a problem at all.
Okay. So what, give me 1 second. I know it's annoying. Sorry, everybody, if there are people watching.
There are, no, it's all good.
Okay. So anyhow, so I don't know where you lost me, but we have a model that's got a retainer and some ownership that aligns me with the management team. And what we'll do is, and these projects are take from anywhere from 6 months to 3 years. Oftentimes we didn't get to this, but we're working with the owners to take in outside capital. So at that point, I serve as a bridge to that capital, putting financial statements together, helping articulate the value proposition, why this is worthy of investing in. in my prior life, I personally worked on over $1 billion worth of transactions, and I've looked at tons of companies alongside some great private equity firms. And so I kind of know what they're looking for. So once we get kind of beyond the company growth plan or fixing, what I see are holes in the business, then we can move on to the capital raising piece. And I'm affiliated with a small boutique investment bank, a broker dealer. And then we can work together on how to position the company, to make it attractive to potential investors or lenders.
So, I mean, I've seen this in PR a bunch, and we have, a few clients that we're aligned with. We're aligned, we try to align ourselves with clients all the time, and obviously working for them, but we have a few clients where we take a smaller retainer and it's blended with some equity. So certainly we're aligned, right? Every month that we work, we're gaining a little bit more ownership in that, and we obviously are very selective with that. But we've seen so many other clients come to us and say, oh, I need the McKinsey, I need the big firm, I need the Edelman of PR. What do you think about that? Because I've also experienced people then come back to us and say, oh, you know what, they didn't service me the way they should. We were just an account there. We were just, whatever. So, being in the trenches with clients, I mean, how do you think that differentiates, a smaller business, and why take a chance on someone aside from the extra time and TLC that you're going to give?
Right. Well, for me, it's fun. So, I like working on building businesses. I like working with founders. Definitely, it depends on the people at the large. It always depends on the people. I don't care, if it's a giant firm or, a small firm, who is assigned to you and who you work well with, and is always important. And there are great people at those firms. And of course there, are folks that get weeded out over time. Now, I think what's nice for for Spring Advisory Services is, I've worked with the big firms and I have contacts there. So for a kind of a much lower price, you're getting a more senior level person who has all those same contacts. So it's a little bit of, bridge of both worlds. And you're not paying, I don't have 8,000 associates running around who are learning, on your dollar. So it's the same reason why you would hire a lawyer who's very senior but may not have the big brand. Look, there are certain times you want the brand, and great. If we, I tell this to people, if there's a point where I think Goldman Sachs is going to do a better job at raising money for you, we will work together to get Goldman Sachs to raise money for you. But again, when I'm aligned with you, we're going to make the best decision together. So if they can do a better job, then by all means, because, I'm going to get paid on the back end with the founder. So
have you had anybody, I mean, I think that's a great model. Has anyone ever, pull back or get scared by the equity piece, or do they, because I think that being aligned is key. And I think that wouldn't push me away, but have you had any pushback?
Yeah, sure. Of course. I mean, this is a business, what I'm doing is takes time, and there's a level of trust that has to be established. So if someone's going to give me access to their baby, right, they have to really believe that I'm value add, and that's going to take some time. I'm not asking for a big chunk. Conversely, I have to have faith in your business, right? Because I could probably only work on 6, 8, maybe 10 clients with some leverage at a time. That I'm only, I have to believe in your business, to be able to really want to work, to want to take the assignment. at this stage, you know, in the growth of my firm. So I think it, you know, people do push back, but if they're not willing to, you know, have that, then it, you know, I may not be the person for you.
And then you're not aligned. And then you're not.
Right. Exactly. Yeah. Exactly. Yeah. And so what am I, you know, what do you get for that equity? Well, it's not only just like my Rolodex. It's not, you know, just my hourly time, but it's, you know, whatever you need. It's strategic introductions. It's it's, you know, interviewing employees. It's trying to, you know, speak with banks, you know, on your behalf to get, you know, access to capital. It's all of that together. And then it's also working on the business, reviewing compensation plans, reading your contracts, pointing things out to help you make better strategic decisions going forward. So it's just like having another senior person on your team, which is kind of how we started.
And as a young entrepreneur myself, starting at 24, I mean, I learned a lot, you know, trial by fire. So I think that having, you know, the expertise and having that knowledge is definitely worth a couple points, you know, to you know, to help you you know, move forward faster. The name of the interview series is The Brick Wall. So challenges, how do we, you know, break through challenges, or in this case, how do we break through the brick or glass ceiling? You were in an industry that, you know, heavily male dominated. You know, what does it mean to you to start, you know, Spring Advisory Services in that type of environment?
Sure. So it's no surprise that the private equity, lending, investment banking community is extremely male dominated and Caucasianly male dominated for that matter. But I think there's a greater sensitivity these days to changing that. And everyone would like to see more senior women and minorities, not only as investment managers, but on, you know, public company boards, as an example. And the large institutional investors are pushing for that through proxy voting. And I'm hoping that this activity permeates down into the private financing world as well. And that goes for investing in companies that are women and minority owned, as well as in backing investment managers, as I just said. If I can make a difference in changing, you know, that landscape, it will be incredibly meaningful for me.
And in your 25 years, or, you know, almost 25 years, as you said, what changes have you seen? And I mean, do you think that there's going to be a leap forward now due to the pressure, the public pressure and media pressure? And what progress have you seen prior to this period of time?
So, you know, I've seen some change, certainly not happening fast enough. But, you know, on the one hand, we're tracking more, you know, junior women than ever. Hiring is, you know, there's sensitivity to that. So I'm hopeful that in 5 to 10 years from now, many will have moved up and not dropped out. Now, this has kind of been the situation and thing that people have been talking about, you know, for a long time. And I think with COVID, I've been reading some articles, I don't know if it's true or not, but more women are, you know, the default partner for childcare. They're the default person for, you know, doing the grocery shopping or cooking dinner, whether I don't know if it's true or not, but that's what I'm reading. And so we do have to help people move up and kind of move up the ladder. Now, at the senior levels, there's usually, you know, 1 or 2 women or, you know, 1 or 2 kind of minorities in, you know, larger financial or medium to small institutional investors or consulting firms like this or banks. But the studies show that the way to maintain that diversity and help people feel comfortable at those levels is to have 3 or more of the same type of person in the room at the same level at the same time. Now, why is that, right? So if there's two women, if there's one woman as an example, that person's may feel shy or inhibited. I mean, not me, obviously, but other people. If there's two women, it could look like the two women may either feel themselves that they are sticking together, or that men in the room feel that the women are sticking together. But once you have three of a kind, or diversity of opinion can come out without bias. So I'm sure I did not explain that right, but what we have to do is get to a place where the personnel in, management teams, not only in finance, but in all types of businesses, reflect diversity, where there's enough diversity that people feel comfortable in contributing to the conversation without worrying that they're being pigeonholed according to a certain stereotype. And to do that, you need kind of a level of, statistically enough people of each kind to do that.
I mean, and you have all this experience. You're a trailblazer who now went out on your own. How do you plan on integrating and integrating these ideas and leveling the playing field within Spring Advisory Services yourself?
Sure. Well, my first associate's a man, so we're already diverse. But anyhow, so all right. So what I want to do is, I have an idea that I think I really want to implement for when I get large enough. And that is to hire senior women who have left the finance world, maybe to have their children, and then they want to come back. So there's no real easy glide path for re-entry into large financial firms. Some of these women want the flexibility to keep their brains working and work on stimulating things that are really important projects, similar to what they were working on before they left. But they can't commit like the 60 plus hours that this type of work, sometimes entails. Now, because of what I'm doing is project-based, I'm really hoping that I can assign kind of a singular project to women who want this, kind of flexible work environment. And I think technology bandwidth problems notwithstanding that we're just experiencing, I think we're seeing that it's possible, but the workplaces have to be flexible enough to allow it and encourage it. And, I'm hoping that if I can do that, that would be awesome. And I'm thinking of building Spring with that model in place.
I think you're a trailblazer and now a visionary. I think that's a fantastic idea. And I think I was just on a call prior to this when, someone started their business she called it life-work balance, emphasizing life and not work instead of work-life balance. And I think that's super important. And it's important for really smart individuals of all kinds to, have that option to spend more time with their family or take care of their kids and raise them. Because, as someone else who, I guess Brad Connors, who I had a couple of weeks ago, said, focus on your kids. You only have 18 summers with them. And putting it like that was like, oh, that was an aha moment for me. So that's, I think I commend you for that, for that model and that approach.
Thanks. Well, making the workplace, making it acceptable is really important. When I had my children, I was practically in the hospital taking phone calls, being on conference calls, and that's something wrong with that. But so creating a workplace where, a true kind of meritocracy on
on people's own terms, I think is super important. And look, it might take longer to make partner, which I think is, personally, I think that's okay if that's a choice that people want to make. But at least having it out there with the same level of work, with the same seniority and the same, I think just having those options is going to be important. Listen, I hope I get there, right? So
of course, yeah, fingers crossed, right? I want to switch topics a little, and then we'll get back into it because I want to talk about Corona and starting a business during Corona. But I was personally curious, and that's why I wanted to ask this. We have Herald and Emerald, and I'm trying to grow them as big as I can, but there's something to outside capital. What's the path for a medium business? I'm not saying that we're there yet, but to going public, to path to IPO.
Okay,
medium-sized business.
Sure. So this is like a really long discussion, but I think the first thing to understand is that there are lots of ways one can exit a business. There are lots of ways that one can take money off the table as a founder, and the IPO is great for certain types of companies in certain industries. And it's not right for everybody. I think personally, the best IPO candidates are do something different or create a new kind of market or platform. And they're novel and they're innovative and they have the ability to scale and become really, really, really big. Just because you don't go public doesn't mean you haven't built a successful company in your own right, or can't make a lot of money or take money off the table in a more efficient way. That, it's just something that you would need to explore. And I don't think a lot of people understand that. So finding, a good advisor, someone like me, or, figuring out who in your network has that knowledge will help you realize, those milestones in your company's development. So, path to IPO for a medium-sized company, I don't think is the best answer. We'll talk about this. We can pivot and go into this in a little more detail, but I don't know if you realize this, but there's only like 3,500 publicly traded companies in the United States. And there are over 150,000 companies in the US that have somewhere between 10 million and $1 billion of revenues. So, wow. And $1 billion. Okay. So if you think about, success, and there are plenty of companies that are privately held that you don't even know about that have $1 billion of revenues. So IPO is not always the be all end all. And in fact, I think 10 or 15 years ago, there were 5,000 publicly traded companies. So the number of companies voluntarily delisting or getting delisted is growing. And as the private capital markets grow and expand, there's just a lot more opportunities. And in fact, I often counsel like a lot of young kids or college students who want to get into finance, like what should they work on, or they can't get a job in like equities at XYZ firm. And I'm like, well, let me just tell you, the bond market is like 50 times the size of the stock market. And so good fundamental credit analysis could theoretically take you to a lot more places. And there's a lot more opportunity. And people don't really, talk about the debt capital markets, but, it's a really kind of interesting interesting marketplace to learn about, and finances a lot of privately held companies as well. So there's a lot, there's a lot of opportunity in the private finance world.
Yeah, not the answer that I was expecting, but it's because everyone says equity stock is so sexy, but that's a great answer, and I appreciate that.
Sure.
Now, since you advise young folk and startup founders and medium-sized businesses, what do you think is key in finding a good partner, or someone who's investing in you? Because it's got to be, I think it's tough. I mean, it's dating and it's a marriage in a sense. So
yeah,
yeah.
That's right. In fact, relationships with lenders and private equity players often last much longer than many marriages. The terms of your typical investment in the private capital markets, debt or equity for that matter, is about 5 to 6 years. That's the underwriting case. And so, yeah, you want to raise that money. Yeah, you want $10 or $15 million, and you're desperate to get it, but it's really not just about the money. It's who you want to work with. It's who is going to, share your vision, especially if things are not going well. So you have to find people that you're really comfortable working with and talking to on a weekly basis, at least in the beginning. And, you also have to realize that it's not just like all the touchy-feely stuff. This is an investment for these people. And oftentimes it's not their money. Okay. So they're fiduciaries. They have people who gave them capital, and they are making, they're supposed to make a return for those people, whether, debt or equity, depending. And they have a real fiduciary responsibility to execute on that vision. So, it's a balance of, you're a founder or owner, you're going to take money in, but, their money is senior to yours in pretty much every sense of the way. So finding the balance between, I just want to say, like, not just like chummy and these are people that you like, but people that you respect is really important, and try and, have a relationship where you'll make decisions together. So I would say, it's not just about the money. I mean, it is, of course, and that's what you're looking for, but this is the private capital markets are a people business. There's no liquidity. All right. We don't just sell privately held companies. You kind of are stuck with each other. And so it's really super important, and any founder or investee company should be doing due diligence on their potential investors and on their lenders as well, which is another reason why you might want to hire an advisor to help you do that.
Yeah, that's an interesting point, because everyone always thinks, like, you see Shark Tank, it's the pitch, I got to pitch, and
Right.
have to, and they have to like me, and they have to do due diligence. But I think that's a point that people don't think about, because they get so excited about pitching and getting the capital, is that as your point that you just made is, doing due diligence on the potential investor as well, and making sure that it's the right fit, I think is super important. Now, I said that we're going to talk a little bit about Corona. 2.5 months before this stay-at-home order and the pandemic started, you launched in January. So what has that been like? And I'm sure challenging, but can you share some of that with us?
Yeah. So I'm still trying to figure the whole thing out, to be honest. So much of my kind of personal business development, with an advisor, I mean, you touched on it before, asking me about equity and giving up equity, depends on meeting the right people in the right business, figuring out if you can help them and getting them to trust you. So networking over Zoom is not is not ideal for anybody. So that's been a challenge. Most of my current clients that I have right now, I sourced, I guess, the leads in January and February. And because I had such a broad network, both with PE managers or with former companies that I worked with, I had like a lot of great momentum. And so I'm still kind of working through that, but I can't help every company that comes to me either. So now I'm at the point where I've kind of exhausted my pre-corona pipeline and I've had to hire people like you, Warren, at HeraldPR hire to help
I appreciate the shout out. I have the logos right here and right here.
To help me with my weaknesses, and my weaknesses are marketing. I can talk a lot, but I don't have the visual presence. I don't have the marketing collateral that to go out and kind of, not that I need to wallpaper the world with spring advisory services, because I could only, work on so many clients at a time.
I do. I feel the need. No, I'm kidding.
Okay. But anyhow, so I've had to adjust, and it's, takes a long time to get a website up and to, figure that all out. But I feel like I'm at a good place. And we'll see. I mean, the marketing aspect has been the most challenging for me.
And I mean, have you learned anything new since going out on your own that you didn't know before?
Yeah, I mean, as I mentioned, I've always worked for big companies, and my salary was pretty much, like a given. And so I have a lot of respect for small and medium-sized business owners. I mean, my husband, is a lawyer, and he started his own firm 6 years ago. And I'm like, what is taking so long to develop, looking at the bank account, right? What is taking so long? Well, guess what? Yeah, now I know. And I have a lot of respect for, small and medium-sized business owners that and people that work for those companies that, make it work every day. And it's hard, but it's fun at the same time. So.
And the timing was rough. What advice would you give folks? I mean, people that you're advising or potential clients,
Sure.
Right now, I mean, it's a tough time. I know that, I think capital is, drying up in certain respects. Obviously, if there's a great idea and a great startup, that, money will be found. But like, what are some do's and don'ts, right now? And what is the market right now for private equity?
Okay, so everyone that you speak to who's investing will say that they're in the market and they're investing. Okay, take that with a grain of salt. Okay, there's a lot of uncertainty out there right now. And if you are a large institution or medium-sized institution, there's so much of your capital that can be allocated to any one asset class at any one time, and private finance is less liquid, right? So that means as an investor, you can't get out, you can't pivot as much. And so private investments take a little bit of a pause during this time of uncertainty. Doesn't mean that they're not going to work on new investments or look and be out there and troll around, but people are not, writing checks right and left. My friends are not writing checks right and left. And they also have their own businesses and their own financial obligations that they're still trying to deal with. I mean, this Corona thing is affecting everybody in every business, in every industry. So that's that's what the environment is, out there. It doesn't mean it's just tough. I mean, it's always tough to raise money. Okay, so what can you do? I think there are some changes that investors are looking for, especially on, I think, on the more venture-y startup side. So if you're looking to raise your kind of initial capital, I would say that you should have a path to profitability. You should understand that, because limited partners are fed up with the duration of these venture capital funds that are not returning money so quickly and that are piling up exposure. You should have a plan that says, okay, we're going to be profitable in X, meaning there will be a time when you burn rate, everyone's familiar with that phrase, right? There will be a time when you won't have to finance, the company will be self-funding and self-financing, at least for a steady state of operations. So path to profitability, number one. Number two, understand like your unit economics, or, the cost of, marketing all in per sale, whatever that is. Understanding what that unit economic is really super important, because all the other SG&A kind of beside that can be, scaled back or expanded, but not the cost of goods, right, to get to that unit sale. So that's super important. As for the don'ts, I think this is also super helpful. This is what I advise my clients. Don't hide your weaknesses. Be transparent. Yes, you want to put your best foot forward. Yes, you want to demonstrate that you have a good product or a good service, but be honest about the challenges. I mean, any smart investor, at least the investors that I work with who have all been super smart, they're going to do their homework and they're going to identify those risks. So to the extent that you can be upfront about them and have a plan to mitigate those risks or deal with those risks and not just explain them away, that's what's going to make people have confidence in you. When someone's investing in your business, they're not really investing unless you've kind of came up with like, I don't even know what, because everything's been invented. All right. People are not investing really only in a product. They're investing in you. They're investing in a person, right? And your ability to execute and, be self-aware or, be business aware of those challenges is super important, because then you'll be able to deal with them. People are not real. So I would just say be, super transparent, super honest, and be confident, but, explain your challenges.
We're a little bit in overtime, so I'm just gonna ask a couple more questions, but I know I'm happy, and your answers have been fantastic. And, for anyone who's watching now or who will watch it afterwards, I mean, chock full of information, which I appreciate you sharing, and I've been learning a lot, and we could see the amazing advice that you'd give. I want to get into recent news, current events. There's definitely the national protest going on, things are a bit tricky in New York and around the country, and for good reason, for the reason that you started Spring Advisory Services. What do you think public and private investors can do to even the plan? I know we talked about what you're going to do and your plans, but like, what do you think? And we definitely touched upon it at the beginning, but what do you think private and public investors can do to level the playing field and to create opportunities for minorities and for women?
Sure. I mean, the first thing to do is really measure, how many women do you have? How many Black people do you have? How many Native American people do you have? How many, really quantify. And I know it seems very, maybe a little backward thinking, right? To say, okay, we're going to establish quotas, right? But if you measure and you report on those statistics in an honest way, and you show growth over time, that's super important. Public, large investors, large shareholders like the, I don't know, the big mutual funds of the world, who vote on public company boards in other countries have demanded that a certain percentage of companies have X number of minorities on their board. But I think it's incumbent upon not only publicly held companies to do this, but I think it's incumbent upon private companies to do it as well and report it to their investors. And lenders and investors should ask the questions of the companies. And the more we ask the questions and the more we report on it and measure it, and the more transparent it is, the more these things will kind of even themselves out. And I think the second thing is assigning a different person every year within a company to be the diversity manager. Okay, that means it's your job this year to quantify and play devil's advocate and ask the difficult questions that no one, wants to address or ask. So if you assign someone that role, that's their job, okay? And they can ask the questions, and that should rotate so everyone sees what it feels like. And if we make this part of the dialogue, then hopefully we'll see kind of meaningful change. And then, so there's getting that change in the door, and then there's mentoring and growing people and making sensitivity awareness, part of the dialogue. And hopefully it's going to take time, but with some of these measurements and quotas, I think we'll get there.
That's a great answer. So now we'll just finish with a little lightning round. We already asked where you're quarantining. What have you been doing? We talked about life-work balance or work-life balance. What have you been doing to keep active, if anything?
I've been swimming, and once a week, I have a personal trainer that I video in with. Not that I really need the personal trainer. I just need someone to get me off my butt to to do it. Okay. So. All
right. Yeah, absolutely. We all need a kick in the butt. My wife and my sister just got me an Apple Watch, and every time I sit on the couch with my baby, it says you have to get up because you didn't stand this hour. I'm like, all right, thanks, Mom. Thanks for yelling at me. How have you tried to remain positive throughout the pandemic?
So the sun actually makes me happy. So I try to just go out and sit outside and do a phone call outside. And at the beginning of this pandemic, I watched the news a lot to be able to stay informed. And I decided I had to cut down on my, news intake because it was just a little depressing. So the combination of walking away from media and walking in the sun has been good.
I used to have lunch with Andrew Cuomo every day too, and then I stopped. I agree. What we talked about business lessons that you learned from this, but how about personal lessons? Anything that you learned?
Yeah. So I never really had any balance before. Never. I mean, I used to travel over 100 days a year. Wow. Breakfast and dinner meetings, really kind of working myself, to the bone, and then crashing on the weekends. And this has been like a forced stop. So personally, I learned that I need to work because I'm not one of these people that's organizing my closets, and I'm not watching TV all day. But so days where I have so I've learned what balance means because I've had no choice starting this business. So days where I have 5 or 6 kind of meetings or calls, and I can exercise and make dinner, that's a perfect day.
That's all. Balance is important. And my last question is, what do you look forward to? You know, we all look forward to certain things, getting out of the pandemic and freedom
Sure.
again. What do you look forward to most?
So I love traveling. Love it. So
Even being on the road 100 days a year, you still like traveling?
you know, I'm one of these people that I love traveling and I love learning about new cultures and meeting people. So even when I would go, let's say to to a conference, or even if I had a very short business meeting and I flew 10 hours to get there and 10 hours to get back, I try to carve out 1/2 hour or 1 hour for something cultural, museum, a special restaurant. I love those big red bus tours, just to get like a sense of a city. So I really miss that a lot.
I know
So
we're itching. My points are definitely stacking up. So I think our next international trip is free, but we'll see what happens.
okay,
The most important thing of all, I know you just launched your website.
Yeah.
Tell us what's the domain, where can the website be found, and where can you be found if anyone's interested in working together?
sure. So the website is www.spring-advisory.com, and the dash is a high dash, not a underscore. It just went up, so feel free to thank you. It always takes a long time, but to get it right. So please, go there. There's a contact form. The phone number is my actual phone number. I will pick up the phone. And I'm happy to really talk to anybody about their business. I can't promise that I can help you, but I'm going to tell you that, relatively quickly. And I believe because this is a long sale and a long time to work together, I'm happy to, give some free advice, I guess, for the first hour or so, just to, see if it's something that you might be interested in.
Well, thank you so much for joining. I'm happy we went into overtime because your answers were amazing and what you're doing is really incredible. And I wish you, the best of luck. And I look forward to, referring folks to you because, that being in the trenches together with a founder is super important. Thank you so much for taking the time.
Thanks, Warren. Have a good one.